For the financial year 24, our revenue growth was at 1.4% in constant currency terms. Our operating margin for the full year was 20.7%. For large deals, we had an excellent year and the fourth quarter. For the full year, it was at $17.7 billion in large deals, comprising of 90 deals. For Q4, we had $4.5 billion in large deals. This is the highest ever large deal value in a financial year for us. For Q4, our year-on-year revenue growth was flat in constant currency and declined by 2.2% quarter on quarter. Our operating margin for Q4 was at 20.1%. We are seeing excellent traction with our clients for generative AI work. We're working on projects across software engineering, process optimization, customer support, advisory services, and sales and marketing. We are working with market-leading open access and closed large language models. As an example, in software development, we've generated over 3 million lines of code using one of the generative AI large language models in the public domain. In several situations, we've trained the large language models with client-specific data within our projects. We've put generative AI in our services and developed playbooks for each of our offerings. We are committed to ethical and responsible use of artificial intelligence. We became the first IT services company globally to achieve the ISO 42001-2023 certification, testifying to our commitment to excellence in AI management. All of this work in AI is part of our Topaz offering and capability. We are delighted to announce the strategic acquisition of a company in the engineering services space today. We continue to focus on our margin program. We saw good impact during this financial year that we've seen in our results. As we look at the start of financial year 25, we see the discretionary spending and digital transformation work at the same level. We see the focus on cost efficiency and consolidation continuing. Our large deal wins in financial year 24 will help us in financial year 25. With that, our revenue growth guidance for the financial year 25 is growth of 1% to 3% in constant currency terms. Our operating margin guidance for the financial year 25 is 20% to 22%. On the revenue, what we are seeing is the environment in terms of discretionary and digital work is similar to what we've ended in this year. We also had good traction in large deals, some of which will flow through in the next year, given the duration of those deals. Keeping that in mind, our growth guidance for next year is as a band higher than where we finished for this year. While the difference is small, it's still higher from where we finished this year. As we go into the industries, we see, for example, financial services to see a better outlook in the next year compared to the past year. We see, for example, manufacturing, which will have, while it'll still grow next year, will have a slightly lower or slower growth than this year. So there are some puts and takes in terms of different industries, and given the outlook with the discretionary spend and digital work remaining same and more focus on cost efficiency and consolidation, we've created that revenue growth guidance.
Yeah, so on the net headcount increases, if you look at it, when we started the year, we were at 77% utilization, including trainees. The growth environment also was different at that point in time. We had guided differently. So, we had to realign some of those factors as the growth environment changed. Our utilization has now gone up to 82%, including trainees, 83.5%, excluding trainings. That's one of the tracks under Maximus as well. Our attrition has also come down significantly, right? So that's the reason why you see a net headcount reduction. As we go forward, we always plan looking at what we are exiting in terms of utilization. We are still at 80 to 83% utilization, depending on whether you're looking at it, including, excluding trainees. So that still gives us some headroom because we've always said 85% is achievable utilization. So that's a headroom that we have. We look into guidance that we give so that we bake in that. Attrition still remains very contained at 12.6%. So, we have that headrooms. And we also have changed in last few years our hiring model significantly. So we no more hire all the freshers for campus. We hire less than half of them from campus, and the rest we hire off campuses. So we have that agile model. So we will look at hiring as the year goes through. We don't have a number to give at this point in time.
The next question is from Sameer Bakshi from the Economic Times.
Hello, sir. This cybersecurity incident, this has come at a time when you're expecting more number of AI and Gen AI projects, right? So is it concerning you, or is our clients concerned because of this event? Second is, I want to know what is the tailwind you're getting in Europe, where we are seeing historical high of a decade.
The second question is about
Europe.
The growth in Europe?
Yeah.
I'll start with that. I'll come to the other one. So as you've seen again in Q4 as well, for the full year, we had a good growth in our Europe business. We continue to see Europe to be a good market for us as we go ahead. There is, of course, changes in the economic environment. So we will see how that will affect what the business will look like. But as a geography, we feel good about different countries in Europe at different levels. We have a very good traction, for example, in the Nordic countries. In the past, we've done an acquisition there. Subsequently, we've had also large client relationships building out there, and that is going quite well for us.
You had another question.
First one.
The
impact on Gen AI projects.
So there, on generative AI, it is something that is being built on cloud, on data, and of course on cybersecurity. But the work we are doing there with generative AI is really market leading, and we are taking all of the learnings into it, especially on the data layer, because data has become the critical enabler for making generative AI successful in an enterprise AI deployment. And so there, for example, making sure that the access to the data, making sure that the way it is put together and organized, making sure that it is used in the right way becomes more and more important.